During the year, we announced a commitment to a 5-year, 50 billion rand capital investment program, and that was to extend life of mine development at several of our operations while also improving asset integrity and delivering efficiency gains. Grow mine to market production by circa 180,000 6E ounces at our lower cost mechanized operations in Zimbabwe and on the Eastern Limb. Increase and diversify our beneficiation capacity, which remains a key competitive differentiator for the group, and strengthen energy security and improve our ESG performance through the targeted spend. Implats is committed to embedding sustainability into the way it works and applying industry-leading ESG practices. Our achievements during the year were anchored by a sound environmental and social performance and an increase in capital allocations to ESG projects.
Impala Canada continued to struggle with a challenging and complex regional environment. The mine has experienced a shortage of critical skills as well as logistical constraints related to supply chain issues caused by COVID-19. This is compounded by an extreme weather event, which led to an 8-day provincial power outage in the final quarter of the year.
Implats continued to deliver robust EBITDA, earnings and free cash flow in the period, despite lower average achieved PGM pricing and the need to navigate several operational challenges.
The unique characteristics of our products, their varied and evolving end use, recyclability, and our commitment to ensure we produce them in a safe, socially and environmentally responsible way underpins their appeal as the world increases its focus on the climate change. Our US $60 million multi-year commitment in AP Ventures Fund 2 continues to benefit the group by expanding our exposure to the evolving ecosystem of public and private sector interests, and through our participation in a tailored portfolio of companies active in each of the hydrogen production, transport, storage, and end use. Positive momentum and intent continue to build for the developing hydrogen economy, with the current energy crisis in Europe resulting in additional policy and funding support in 2022. We expect focus for hydrogen-related PGM demand to evolve over the medium term as technology paths, loading factors, and market sizes become clearer.
Macroeconomic uncertainty, inflationary pressures, and geopolitical challenges are likely to persist over the coming year. We will remain vigilant and alert in assessing and responding to the risks this uncertain environment presents. The operational focus in the near term will be to re-establish positive operational momentum at Impala Canada and Impala Rustenburg, ramp up installed milling capacity at Zimplats and Two Rivers, and advance the group's significant suite of projects across our mining and processing assets. We are aggressively pursuing the conclusion of the offer process associated with our acquisition of Royal Bafokeng Platinum, with an immediate key focus on securing outstanding regulatory approval from the Competition Tribunal. Mine-to-market concentrate volumes in financial year 2023 will be supported by growth from Zimplats and Two Rivers, and expected improvements in performance at Impala Rustenburg and Impala Canada. The conclusion of 2 third-party contracts at IRS will result in lower third-party receipts. Group 6E ounces refined production is expected to be between 3 and 3.15 million ounces, impacted by the scheduled rebuild of the next furnace during the period. We expect a stock buildup of circa 60,000 ounces as a result. Group sales are expected to be in line with refined volumes. Group unit costs are forecasted to rise to between 18,200 and 19,200 Rand per 6E ounce on a stock-adjusted basis. Our capex guidance reflects a ramp-up in expected growth and replacement capex at the group and is projected to increase to between 11.5 and 12.5 billion Rand. This guidance includes the translation of the dollar cost base at Zimplats in Canada at an assumed exchange rate of 16 Rand to the US dollar.